It's a pleasure to be here today to discuss India's auto sector. In this presentation, we will explore the key insights that are shaping the auto sector. Whether you are familiar with the subject or new to it, I hope this video provides valuable takeaways. So, let's get started. India's auto sector is evolving at an incredible pace. From leading global two-wheeler production to a growing EV market, this industry is shaping the future of mobility. In this video, we will break down the latest trends, market leaders, and the exciting future of India's automotive industry. Let's start with an overview of the auto sector. India's automotive industry is a powerhouse, shaping mobility for millions and standing as a global leader in two-wheelers and three-wheelers. But what do the numbers really say? Let's dive into the details. India is the largest producer of two-wheelers and three-wheelers in the world. Yes, our country has carved a niche for itself in the global automotive landscape. The contribution of this sector to the national GDP has risen to about 7.1% now from 2.77% in the year of 1992 to 93. It provides direct and indirect employment to over 19 million people. The Indian automobile market is divided into multiple segments, with two-wheelers leading the charge in terms of volume. To give you an idea, a staggering 19 million two-wheelers were sold in FY 2024. In comparison, the passenger vehicle market saw sales of approximately 4.3 million units in the same period. When it comes to passenger vehicles, one name stands out: Maruti Suzuki. With a market share exceeding 41%, Maruti Suzuki continues to dominate the segment. Meanwhile, Tata Motors has solidified its position as a leader in the commercial vehicle space, demonstrating remarkable growth and influence. Maruti Suzuki India Limited has been the undisputed leader in the Indian passenger vehicle market. In 2023, it maintained a strong hold with over 40% market share, but competition is heating up. Hyundai holds a market share of 13.75% and Tata Motors is not far behind, standing at 13.72% as of December 2024. Now, let's talk about two-wheelers, a segment that defines India's mobility culture. Leading the pack is Hero MotoCorp, holding a solid 29% market share as of February 2025. Close behind is TVS with 18% and Bajaj Auto with 11%, making them key players in this ever-growing market. Overall, global passenger vehicle sales in 2023 were estimated to be around 78.9 million units. Leading the market, China recorded approximately 26.06 million units sold, securing a dominant global share of about 33%. Following closely, the United States accounted for 14.72 million units, holding a 19% share of the global market in 2023. According to CRISIL MINA, India had 26 cars per 1,000 people as of fiscal 2024. While this represents growth from 22 cars per 1,000 people in fiscal 2019, it remains significantly lower than the penetration rates in developed nations and even emerging markets like Brazil, Russia, and Mexico. This indicates substantial potential for expansion driven by factors such as rising disposable incomes, faster economic growth, a younger population, and increased interest from international automotive manufacturers. The Indian passenger car market was valued at US 32.70 billion in 2021, highlighting its significance in the global automotive industry. Meanwhile, the global electric vehicle, which is the EV market, was estimated at approximately US 250 billion in the same year. By 2028, this market is projected to grow fivefold, reaching an astounding US 1,318 billion, reflecting the rapid shift toward sustainable mobility solutions. In the two-wheelers segment, the space of EV seems very interesting. People are more likely to buy the EV in India, and Ola Electric has the majority of the market share. CRISIL has estimated how India's economic growth will impact the passenger vehicle industry over the next 5 years. They looked at three different scenarios. Looking at the first one, we can say that if GDP grows at 6% per year, the PV industry is expected to grow at 4.5% per year and reach 5.2 million vehicles by 2029. Second, if GDP grows at 7% per year, the PV industry can grow at 5.5% per year. And the last one, if GDP grows at 8% per year, the PV industry can grow at 6.5% per year and reach 5.7 million vehicles by 2029. In short, faster economic growth leads to more car sales. Now, let's have a look at sales growth trends among four major firms with a special focus on TVS Motor Company. Now, when we talk about sales growth, consistency is a key. Among the four firms in question, TVS Motor Company stands out as the most consistent in terms of growth. While other companies may experience sharp increases followed by steep declines, TVS has managed to maintain a steady and positive trajectory over multiple periods. One of the most impressive aspects of TVS Motor Company's growth is its ability to avoid extreme fluctuations. Instead of unpredictable peaks and deep drops, its growth is distributed more evenly over time. This is a significant advantage because it indicates stability and resilience in the market. For investors, stakeholders, and even customers, this kind of steady growth builds trust and reliability. Of course, no company is immune to market challenges, and TVS is no exception. There has been a recorded decline of negative 6.5%. However, when we compare this dip to the performance of other firms in the same segment, we see that this decline is relatively minor. Other firms have faced much steeper drops, making TVS's performance look even stronger in comparison. What makes TVS's growth strategy stand out? It's their ability to spread growth across multiple periods rather than relying on short-term spikes. This approach minimizes risks and ensures long-term sustainability. Instead of focusing on one-off gains, TVS Motor Company has adopted a steady and calculated expansion strategy, ensuring its position as a strong player in the market. In a competitive industry where market trends shift rapidly, Having a consistent growth pattern is a major achievement. It demonstrates strong business decisions, efficient operations, and an understanding of market demands. Companies that grow too fast might struggle with stability, while those that experience frequent declines might find it hard to recover. TVS seems to have found a balanced path that allows for long term sustainable success. So, what does this mean for investors and consumers? If you are an investor, consistency in sales growth means a lower risk investment with a promising future. For consumers, a company that performs steadily over time is often a sign of quality products and reliable service. Now, we are diving into some exciting updates straight from the latest con call notes of top companies, and there's a lot to unpack. So, let's get started. First up, let's talk about TVS. They are making massive strides in the electric two-wheeler space. The numbers speak for themselves. Their EV sales skyrocketed by an impressive 57% in just 1 year. In quarter 3 alone, they sold 76,000 units compared to 48,000 in the same period last year. That's a significant jump, and it shows how TVS is capitalizing on the growing demand for electric vehicles. The future is electric, and TVS is not just keeping up, they are leading the charge. But that's not all. TVS is also growing in another major area, financing. TVS Credit has been expanding rapidly, bringing financial solutions to millions of customers. This year alone, they have added over 3 million new customers, taking their total customer base to a staggering 17.7 million. That's a massive number, isn't it? More and more people are trusting TVS Credit for their financial needs, which speaks volumes about their credibility and reach in the market. These numbers highlight two key takeaways. First, the shift towards electric vehicles is happening faster than ever, and second, financial accessibility is playing a crucial role in this transition. TVS is not only manufacturing EVs but also ensuring that people have the financial support they need to buy them. This strategy is proving to be a winning formula for them. Royal Enfield plays an important role when it comes to Eicher Motors. The brand has recorded impressive numbers in quarter 3, selling a whopping 269,039 motorcycles, a solid 17% increase compared to last year. Breaking it down further, domestic sales stood at 241,971 units, reflecting a 13% year-over-year growth. But the real game changer? International shipments soared by an incredible 71%. That's right, Royal Enfield exported 27,068 units, proving that its motorcycles are winning hearts worldwide. What's even more exciting is the fact that about 18 to 19% of their sales came from first-time buyers. This means Royal Enfield isn't just catering to loyal enthusiasts but is also successfully attracting a whole new generation of riders. Now, let's talk about Bajaj Auto. Bajaj is making waves in the industry with record-breaking achievements. The company has hit its highest ever market share in both electric two-wheelers and three-wheelers, showing its rapid expansion in the EV segment. In quarter 3, Bajaj exported over 500,000 units, marking a major milestone after 2 years. What's even more remarkable? Their export volumes surged by 27%, nearly double the market growth rate. Latin America is becoming a key battleground for Bajaj, with exports to the region growing by nearly 40%. But here's the real kicker: Bajaj's EV three-wheeler market share skyrocketed from 13% to 35% in just 1 year. That's a massive leap. And there's more. Bajaj has launched the Bajaj Go brand for e-autos and is planning a cutting-edge e-rickshaw by FY25. Clearly, Bajaj Auto is making all the right moves to dominate the EV space. Let's shift our focus to Hero MotoCorp. Hero is proving that it's here to compete in all categories. They have gained market share across a staggering 95% of their portfolio. Whether it's the 125cc segment, electric vehicles, or premium bikes, Hero is growing strong in all of them, with continuous innovation and a strategic approach. Maruti Suzuki continues to dominate the Indian passenger vehicle market with impressive numbers. In Q3 of FY25, the company sold a staggering 566,213 vehicles. Out of these, domestic sales accounted for 466,993 units, reflecting an 8.7% year-over-year growth. The export segment also showed remarkable progress, with a massive 38% increase, reaching 99,220 units. The retail sales performance in Q3 hit an all-time high, further contributing to a 3.5% growth in the first 9 months of FY25. With this momentum, the company is optimistic about continuing the strong performance into Q4. One of the most noteworthy trends in Maruti Suzuki's growth story is the surge in rural demand. Rural sales grew by an impressive 15%, significantly outpacing urban growth, which stood at just 2.5%. This indicates a strong preference for Maruti Suzuki vehicles in non-metro regions, reinforcing the brand's widespread appeal across India. Another key highlight from the latest earnings call was the continued demand for CNG vehicles. In Q3, 1 in 3 cars sold by Maruti Suzuki was a CNG model. This clearly shows that Indian consumers are prioritizing fuel efficiency and lower running costs, making CNG cars an increasingly popular choice. With these positive trends, Maruti Suzuki remains a leader, leveraging rural demand and CNG vehicle adoption to drive sustained growth in the Indian automobile industry. Hyundai Motors is making waves in the automotive industry, particularly in the SUV segment. The company has seen remarkable growth, with its flagship SUV, the Creta, achieving its highest ever domestic sales. In an impressive milestone, Hyundai sold 186,919 units of the Creta, solidifying its dominance in the Indian market. This success has contributed to Hyundai's massive 67.6% share in the domestic SUV market, proving that their vehicles are not just popular but are also setting new benchmarks in the industry. Hyundai's focus isn't just on urban buyers, they are rapidly expanding in rural markets as well. Their rural penetration has increased significantly, reaching 21.2% in Q3 FY25, up from 19.7% the previous year.
What's even more interesting is that SUVs make up 67.6% of Hyundai's total rural sales. This clearly shows that larger vehicles are gaining traction even in smaller towns, reflecting changing consumer preferences. Looking ahead, Hyundai has a strategic vision for the future. While they expect the passenger vehicle industry to experience low single digit growth in FY26, they are determined to align with market trends. Their focus will be on balancing domestic and export volumes to mitigate market risks, ensuring stability in an evolving landscape. Tata Motors is making massive strides in the electric vehicle space. Their commitment to sustainable mobility is paying off, with EV penetration reaching an impressive 24%. That means nearly a quarter of their total sales now come from electric vehicles. EV offtakes have grown by 15%. This shows that more and more consumers are opting for electric over traditional fuel powered vehicles. With increasing awareness about sustainability and the push for green energy, Tata Motors is positioning itself as a leader in India's EV revolution. With more spending power and aspirations for mobility, demand for vehicles is increasing across all segments. Leading international companies are investing heavily, bringing advanced technology and innovation to India. Electric vehicles are the future. The push for clean energy and government incentives are encouraging EV adoption. Beyond urban centers, rural India is becoming a significant growth driver for automobile sales. From two-wheelers to commercial vehicles, the sector is expanding steadily, with major investments from both local and global players. Electric vehicles are taking center stage. The future of mobility in India will be defined by eco-friendly technology and smart innovations.